All right, good morning. It's a pretty decent gap down to start the day. Seems markets are a little nervous, but they did get to the top of the trading range, or pretty well. Most things are at the top of the trading range, so not surprising to some extent, but a little surprising. I am anyway that such a reaction first thing Monday morning, and the Fed decision isn't until Wednesday. Maybe there's some other news going on, but that I'm not aware of. But just looking to the left, it's up at resistance, did back off on Friday, and now things are starting lower. Of course, well, lower to where? That's always the key. And you see my cursor there, it's lining up a gap down decently below Friday's low and into Thursday's range. And well, it's not a pivot because it doesn't have three higher lows to the left. Common sense says that this area is where this price support is, and it's in the area of the whole number, give or take. It's not quite there. So any dip lower after, after the open should find some buyers there initially. And it's a pretty, like I said, it's a pretty good sized gap down, which, we'll see as buyers step up. They should. I mean, this is still in an uptrend. It's coming down to this low area right here, just congestion, 400, 4,000 on SPX. Still got a very large open interest on puts and calls there. So I think initially, I think it should hold. Maybe for a half hour, we'll see. But initially, that's what I'm thinking. All right, so okay. When I look at SPX, I can reference where that's going to gap down to since we don't see the gap. All right, so you can see this is coming down to the pivot. Very strong momentum to the downside, cutting through these pivots. Decent retracement, but still on this time frame, we still want to see ultimately this would come down here, and then we'd have a slowing in momentum to the downside. And because it's here and coming here would be much smaller than this drive lower, which would set up, in my opinion, at least a counter trend bounce. How far it gets, and we'll see. Good morning, McGraw. And that's what I have written down, 39.80. And initially, before I looked at SPY to see the size of the gap down, I was a little thinking, wow, maybe it's 39.85. A little more juicy. Will it get down there? So let's go look at SPX. So here, right, it's gapping down, give or take around here, right about there, based on where SPY is. And so that low, that's Thursday's low. And that's this area right here. Going down there again, assuming there's going to be buyers, and then there's a void below. So looking at that, and of course we always look at SPX credit spreads is looking at the chart and saying, what's the worst case scenario based on the chart where prices could go in a really nasty, ugly day? And that would be down here. And that's below 39.80. Still, hold on a second. Average ranges have been around 54 points, 55 points. And so that would take that down below 4,000, but not near that. So 39.80 should be fine. Right. And what is McGrath? 4,100, good spot. Yeah, but last I looked, there was no juice above there. If it rallies, to be able to get above 4,100 would would be a no-brainer, Ty, but there's no premium there. So it wouldn't make sense to do it. On the upside, you got to go to 40.90, maybe 40.95, extra wide. Not mine. McGraw can double check. I see 30 cents by 40 cents at 41.05. That would be highly unusual to have premium up there with this gap down. So I think the 40.90, it's gapping down here. I think 40.90 would be fine, you know, with the size of that gap. Yeah, 40.95. Yeah, 65 by 75. Again, probably like 30 wide. So going up there, you know, there's those highs. So we always want to get as far away as possible. So if the market dips at the open, right, coming down to this low here, it should get a little bit more juice down below, maybe below the 39.75. So you'll have to assess that. All right. So other markets, Qs, you know, retracing pretty deep into the bar, you know, on support. You don't know where it's going to end the day. So, you know, makes sense. Buyers to be here. Let's see who the Qs, the size of the gap down. You know, gapping down to the low of a range expansion bar at resistance. That's bearish. That's bearish. And so the same story, you know, coming, you know, down to Thursday's low. That area is where buyers should be. You know, over the weekend, I thought with that bar, maybe it could tag 300, but that ain't happening today. So interesting, you know, as bullishly as it be, technically, forgetting news, technically, it would say, yeah, you know, sellers are going to be here. I knew that for sure. But this open this morning is a little surprising, which I've already said. There's tons of earnings coming out, you know, during the week, you know, big tech and so on. So probably still going to be pretty whippy. Dow, not a big deal, but you can see potentially what looks like a head and shoulders top. And, you know, technically, I believe the textbook is the right shoulder is supposed to be lower than the left shoulder, but hey, we're not going to argue with a sideways trading range. Yeah. Yeah. So Don's saying spiders building the range. World 2. Yeah. You know, I wouldn't count on that being anything of significance at the moment, but, you know, again, we want to see, you know, as to where it is, an obvious point to have this pattern. Right? So the idea would be, you know, to have a pattern, something like this, and it happening here. That happening here. So the idea, right, is to line up a pattern that's consistent with a bias of a higher time frame. Here's where buyers would be more aggressive and some type of a confirming pattern. All right, Russell, not that big a deal. All right, slowing momentum. And when I say slowing momentum, those of you that think of that from the eyes of indicators, which we don't use, the way to really see slowing momentum is just seeing, you know, this is strong momentum. It says, hey, the pullback should be viable. Now the distance between the highs is close. You measure that after you get a red bar. This bar is not done. But if it was done, that's how you view slowing momentum, not through indicators that would, that's making a higher high and that's a higher low. This is very deceptive. You have to change settings and so on. Bitcoin backing off. The resistance was up here, but it doesn't have to get there. It's an area still trending up, strong momentum. Dollar doing nothing. There was some news about the euro this morning. That's really not doing much of anything. So with this Fed thing, we all know the dollar's been pulling back in anticipation. It's on this major support. It hasn't turned up. It's just sitting there dead in the water. Interest rates are on that support, what we've been talking about, and they're up a little bit here. So looking to the left, demand area, it's moving up a little. Markets haven't liked that. And I would think maybe this is more why the markets are starting lower, because interest rates are going up a bit this morning. Silver's been in a trading range, no change. Gold, momentum slowing down, look to the left. Crude oil had a bit of a breakdown on Friday. It's going lower. And the oil ETFs held up relatively well. In the face of that, we'll see what they do today. And our transports, we don't get any data on there, but they did not advance last week as other markets did toward the resistance. They held there. And so we'll see where this opens. And it'll be interesting if this gaps down below this pivot low, that'll be another bearish implication on EU inflation data. Okay, Alex, tell me the markets drops on EU inflation data. Well, they don't know that there's inflation. Yeah, the markets, Remember a year or two ago, everything was about China every other day. It would gap up, gap down, China this, China that. Many years ago, it was about Greece. So the markets are always finicky. And whatever the news of the day is, we'll jiggle it around. And I think that's about it. Pretty quick here, but just looking at so many different ETFs, which we did over the weekend. You see so many things are up against the top of their respective trading ranges that it just makes sense that sellers are going to emerge here. And I just figured the news would provide hesitancy about sellers being aggressive, but maybe they're just anxious to get out. But we'll see what the retracement is after it reaches support. That'll tell the whole story. Sentiment, and this has been diverging. I mentioned this last week where, this has been moving up, an internal weakness starting to emerge, but still well above zero, and sentiment peaking up into those upper bands. So continue to have more jiggles and price action, of course, and we'll keep an eye on those semiconductors that have had a phenomenal run, right? They were the top of the leaderboard 2 weeks in a row. And some of the stronger, now this greater than 100% retracement, this breakout obviously is positive in this bottoming action, but the greater than 100% retracement also is suggestive of prices beginning to retrace. So in the coming weeks and maybe month, depending on how long whatever correction is going to take, this is going to be very telling, because whether it's semiconductors or even beaten down retailing, which cleared these highs, there's lots of positive occurrences that have happened and lots of individual stocks. So whatever happens here in the coming weeks is going to be really key as to all of these other bullish turns that have occurred here in this month. So all yours, Dan.
Good morning.
We got two mics on.
Yeah, good morning. Yeah, everyone's been asking, is this, I mean, rightfully so. Is this a long-term bottom? And we've been objectively talking about it for a long time. And I'm saying, I don't know, it's very bullish. I keep mentioning this January 6th. We've been very bullish. We closed with a topping tail at resistance, bearish internals. So we said, danger, danger. In the weekend video, I said, we're not going to be aggressive here. We have very light inventory, which is good. And I actually have more long setups than bearish ones. But we get the Fed meeting and it's time to be cautious here, not when I was pounding on the longs on January 6th and thereafter. Let's see. Couple of alarms going off here. Charter. Let's see. Let's show pre-market. All right. Charter. So we should have a bunch of call spreads now, with the technically on the charts and the internals. So the only fly in the ointment is the risk of Wednesday. And earnings, of course. We got a bunch of FANG stocks, but Charter had earnings Friday. 180 reversal, gapping down. That's a call spread candidate. FRPT, bullish consolidation here. Bull rectangle looking thing. I see one print up here, but this is a put spread or a naked put idea. Carvana. The junk was moving. This is actually gapping up today. This is a put spread idea for the weekly options trader. SPG, I had a low alarm going off here, but we bought this on Friday. We have a nice open gain, so we're just in trail mode here. Yeah, it's a dog. It's a dog, but the dogs, we call it junk. The junk moves. On the weekly options trader, we put on a put spread on Goldman, but we're way down here, the 337s. So we still have plenty of room, gapping down with the market, but we just got to sit with that. And then we have two of these EV stocks, LI put spread, Riven. We got put spreads. They should be fine. Look at LSID. LSID was gapping up pre-market, and look at that move. Somebody said that was a buyout rumor. I did a video yesterday on a couple of EV stocks that I have on my watch list. So LSID actually came in, but that's too extended for me anyway. BABA. There was some news on China slowing down, and I heard Alarian mention Spain also. So I don't know how much of that is filtering through here. Something's going on with China again, but this is a call spread candidate. Absolutely gapping under all this. Look at the angle of the 20 from the 50. This thing's been on a tear. So definite call spread if there's juice and you got the risk Wednesday. Ballard here. This was one on my watch list. Here I put all the EV stocks right here together. So Quebec Sierra had a closing breakout. Beautiful 1, 2, 3 on the weekly. ENS bullish consolidation flagpole. So that's another bull rectangle. This, it's not. I don't have a great void, but Fridays. I don't even know if that tail's real now that I look at it. That doesn't look real. That one I'm not crazy about. Let's delete that one. Solo, yesterday's high. I could go to $1.20. Yeah, Snow, we have a put spread in the weekly. Aurora here, I mean, look at this thing was left for dead. This thing used to be $40. Nice double bottom down here. I love double bottoms from Climos, and that is exactly what that was right there. Didn't expect didn't expect to move like this, but now it's consolidating over time. This one, big movements, but look at the weekly. That is a 100% bullish bottoming pattern. So I'm gonna set an alarm at 217 just because that's Friday's close. HYZO 217. NIU, it's at the top of the range, but look at this weekly. Beautiful. Beautiful bottoming pattern weekly. So I want this to chop around another couple days. And I see it gapping down, which is fine. Let's see if it recovers. Ride bottoming pattern over the high looks great. Nicola engulfing bottoming pattern over the high looks great. ARVL deep retracement, but it's a buy setup. It made the turn. Set an alarm at 42 cents. SLGN. Now, this is a 1, 2, 3. It's at resistance. There's no question about that. But I love this breakdown failure range expansion bar. So that is a bullish pattern as long as it stays within the upper 40%. I'm going to set an alarm 5290. RRX, bullish consolidation, bullish weekly. I mean, there were bullish bottoming patterns all over the place. ROGS just slowly churning its way higher. Bottoming pattern, closing breakout. Look at the monthly here too. Monthly down from 185. This is a double bottom, new low plus on the monthly. There's a lot of bullish patterns. So I'm happy we're gapping down here today, and because ideally, we need those internals to burn off. And this pullback is going to help. And then 3 days of chopping around, if we can get through FOMC on the bullish case, could be setting up fantastic entry opportunities, or it can just confirm even more so last week's high, and we see how deep we go. CHPT, another battery stock. Zoom closing breakout, Friday's highs, put spread, UAA. That's bullish swing or put spread, Friday's high. Bios we're already in the ETF letter, but that's bullish daily, weekly, monthly. Labu is a derivative XBI. IBM is a bear 1, 2, 3. So 30-minute low, that's a short idea. Wolves, we actually did our earnings naked put on this, the 60s. Friday's high, you could consider another one. Yeah, Thomas Carvana is already posted as a put spread. FFIV, top of the range, but gap reversal, put spread idea. Workday on a pullback and reversal, put spread low, positive Barron's mention, gapping down, no pattern, you're gone. Kilo Delta had a positive mention in Delta in Barron's, and I do like this one. look, see how that's an inverse head and shoulders. The right shoulder is smaller, but you got a gap reversal, you got a bottoming tail, and you got a closing breakout and a bullish weekly. I have these on other computers. VHF. Why am I looking at you? It's a breakout daily, weekly, and it's correct, McGraw. That's correct. And it's a buy setup here in the upper 40% on the monthly. So maybe that's why I'm watching this. On a pullback, daily, weekly, monthly are all in alignment. Natural gas has just been devastated here since the November high, and no sign of turnaround. AIZ, another bottoming pattern over Thursday's high, or even I'm going to set an alarm at 131 over that 15-minute base. I don't think it'll trigger unless it's strong and or the market is. Snow. So Greg, I have this as a put spread over Friday's high. Let's watch this together. Could be a better entry. Maybe 30-minute high.
Where? What strike? I mean, that seems kind of extended to do a put spread.
Yeah,
It's pretty far away.
Yeah. It's way far away. It's the 145, 140. Yeah, so down under Thursday's pivot. See this 15-minute pivot right there? So it's right there.
Mhm.
Boeing, Thursday's high. This looks fantastic as a directional and put spread. And I'm okay with our posted longs for the most part because I don't think they're going to trigger unless they're strong. Teradyne, we actually did a naked put into earnings, which was Friday. Bullish close. If this can hold relative strength and go sideways, then it looks great. CFG closing breakout, daily, weekly, monthly, a little bear sandwich kind of thing. Looks great. GIS, Climo. Here I have these another computer. GIS. Climo, Friday's high. A10, I just posted this as a watch as all, a short watch. Look at this bearish consolidation. The bottom 50% of that bar, actually a closing breakdown, bearish weekly, that looks very weak. VSAT's a bear 1, 2, 3. Bottoming pattern, NTLA looks great, daily, weekly. Beautiful bottoming pattern. Looks great. Target 45. AVH alarm. All right, I see one print up here. And I got a couple of other alarms going off. NITLA. This was a long NITLA bio. So let's do 5-minute high on NITLA. GIS. NITLA's on its own page. GIS is triggering. I think GIS is good to go. Let's do 5-minute high on both. Just particularly on Mondays, I like waiting 5 minutes. All right, VSAT. All right. So this was a short and it's gapping under the entry. We're gonna get filled in. So Greg, any thoughts on entering this? This was a bear 1, 2, 3. I think
Where's the stop? If it's above the red bar, it's fine. I mean, looks
Yeah.
like the 50 MA, but It should be fine.
Right, that's why I don't know if we want to do a shorting a bounce here in the resistance or 5 minute low.
If it's in the letter as a swing and
Yes,
triggered, you know the story. You know, we don't know who can watch what, 5 minute lows, that kind of thing. You know, people at work going to watch a 5 minute low on their phone? I don't think so.
well, but that's what I'm getting at. Should we tell them to we watch it together and say it's okay to short this bounce?
I think you just do it with a stop above that red bar if that's where you put it.
Yeah, that's where it is. All right. What am I learning?